Hey everyone, I know a lot of investors want to capitalize on the growing trend of artificial intelligence and AI stocks, but feel like they missed out on Nvidia since Nvidia's stock price has soared by so much already. So they're looking for another AI stock they can buy. Well, in this video, I'm going to bring you one AI stock that's down 75% off its high that you can buy if you feel like you missed out on Nvidia stock. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, like I mentioned, Nvidia's stock price has absolutely soared in recent years. I have here a 3-year stock price chart for Nvidia stock, and you can see it rising from a little under $250 per share around July of 2021, jumping all the way up to $882 per share as of this recording, a nearly 4x increase in a little bit of time. And most of that increase coming from January of 2023 to today, because from 2021 to 2023, the stock was roughly flat and then exploded in 2023 as investors noticed the strong demand from artificial intelligence coming to Nvidia, and its revenue and its profits and its cash flow absolutely exploded. So I can understand some investors feeling like they missed out on Nvidia stock. Still, I have Nvidia stock rated as a buy. I've had Nvidia stock rated as a buy for over, I want to say 6 months now, at least 6 months. I put Nvidia stock on my list of top stocks to buy in 2024 when the price was around $500 per share. And I still have Nvidia stock on my list of top stocks to buy in 2024. But if you're feeling like it's gone up too much too quickly, I think UiPath is another AI stock that is down significantly off its high still, that makes an interesting investment. Now, in its latest quarter, Nvidia management said the combination of UiPath's AI and automation is the strategic change enabler for our customers that makes any digital transformation easier and faster while empowering customers to innovate, adapt more quickly, and grow. And UiPath is gaining traction with customers as they look to combine automation and artificial intelligence for a truly powerful pairing. And you can see that in UiPath's results. In the latest quarter and the latest 12 months ended January 31st for UiPath, they've demonstrated strong results. In the latest quarter, revenue increased to $405 million, up from $308 million, while operating income jumped from a negative $45 million up to positive $15 million. So a huge surge in profitability in the latest quarter, and that was paramount throughout the year. Total revenue for the trailing 12 months increased to $1.3 billion, up from $1.058 billion, while operating loss improved from negative $348 million to negative $164 million. So they improved their losses in operations by roughly half, or a little more than half. And then in the latest quarter in particular, they made the jump. They hit the inflection point, reaching profitability in operating income due to rising revenue and keeping costs under control. Still, UiPath stock price is down 75% off the high, despite their solid performance and its position to benefit from the rising effectiveness in AI. The company has been growing revenue for several years. It's up to 1.3 billion, like we talked about, and that's up from around 600 million in 2021, in early 2021. So revenue, trailing 12-month revenue has more than doubled. Profitability has improved, reaching operating profit margin positive in the latest quarter. You can see operating profit margin for a trailing 12-month period. It was still negative, but you can see the progress moving forward. I often say I don't mind when companies are losing money on the bottom line, but they're demonstrating to me progress towards profitability, and UiPath is doing that in strong form, heading in the right direction, making strong strides towards profitability. In fact, analysts on Wall Street expect UiPath to grow its earnings per share by 46.2% for the next 5 years. That's a very strong earnings per share growth. And even if the company doesn't hit that target and just approaches it, That would be great news for UiPath stock investors. If it achieves 30% earnings per share growth over the next 5 years, UiPath stock price is likely to be much, much higher than where it is today, even at just 30% earnings per share growth, which would only be 2/3 of what analysts on Wall Street are expecting from UiPath. So even if it only delivers 2/3 of what they're expecting, their stock price is likely to be much higher 5 years from now. So the case is strong for UiPath. And if you look at cash flow from operations, that's made strong improvement as well, up to 22.86% positive. That's up from negative 12%. It was moving in the wrong direction. And then I mentioned in a video last year, the company made cost-cutting efforts, slashing costs, and those improvements really streamlined profitability and are really showing through here in 2023 and 2024. Late 2022 is when management implemented these cost-cutting efforts, this restructuring, and you could see it working. You could see the cash flow from operations jumping. You could see the operating profitability jumping. And so this is good to see when you see a management team implement a strategic shift, and then following that strategic shift, 6, 12, 18 months later, you see the progress. You see tangible evidence of improvement. This isn't just hopes for something in the future. This is tangible evidence of improvement coming from UiPath, and I like to see this, and I give credit to management teams when I see them make effective change and I see the progress after implementing these effective changes. Now, UiPath is trading at a forward price to earnings of 31.27. In my opinion, that's a bargain valuation for this AI stock, especially when you consider it's expected to grow earnings per share by 46% for the next 5 years. Now, a general rule of thumb is if you can buy a stock at a forward PE at a number that's lower than the earnings per share estimated growth rate, then you're getting a good deal. Now, there are some cases where you want to look at more specifics, but just in general, when you're getting 46% earnings per share growth for the next 5 years expected, and the valuation is 31, that's generally a good deal. That's generally a good deal. Again, be careful. You want to get into specific situations, but in general, when that's the case, you're getting a good deal. And for UiPath right now, that is the case. I've dug deeper into this, and for me, I think this is a good deal for UiPath. The risk versus reward is worthwhile here for UiPath at current valuations, with its current prospects, with the industry that it's addressing, with the management team that's proven adept at improving the business prospects. So all those things considered, if you're looking at capturing the benefits of artificial intelligence and AI investing, and you feel like Nvidia is too expensive, even though I don't think that's the case, but if you feel that Nvidia is too expensive and you're looking for an alternative investment or another investment that is going to benefit from rising effectiveness of AI, then UiPath is certainly a good choice to consider. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.